everybody. I just want to cover a few topics, mainly just one topic, but how I began to use intermarket analysis with NQ. Usually, I kind of talk about having the dollar and how that works against the indices. But listen to ICTs recent shotgun Saturdays and the Six Sister concept and how I kind of incorporated that a little bit, like pieces of it, into my model and how I kind of took today's price action and how I implemented it in action. So I had a bias of short on the indices this morning, but NQ really kind of had an urge to kind of maybe run higher and run out some buy side before running lower. NQ is more, exaggerated. And I kind of noticed that as I was studying this weekend of how it will make a move and a run a high, then it'll give up the goods and come lower, or it may run a previous low and then move higher. How I kind of put this today into perspective was, and this is kind of my annotations from this morning, and I'll show you the executions. But so we had this candle, the 8:30. We got some news drop. We had this 15-minute buy or February gap right here, this orange, and then we have this other one right here. So my model is that I wait till 10, the first 3 minutes of trading to open, and then I'm gonna go on the hunt and use that from that 10:10 or that 10 o'clock to 10:10 period for the price to deliver to the algorithm. If we just jump to ES, and I want to kind of backtrack because listening to that Twitter space, I never had NQ charted, right? I would use it maybe like the compare feature, right? If I want to look at a SMT divergence, but I never really had it charted with like levels and, different things of such like that. The most I did it was with the compare tab. I was like, I only trade ES. That's the only pair I trade, or the only indice I trade, so I don't really need to have it charted. But it really came in handy this morning because typically I would have seen this right here, this imbalance, and then when 9:30 where it came in, I probably would have been a little aggressive and jumped in right here in this 15-minute free rate gap. I know it says 5, but that's for this right here. So I didn't, right? I was like, okay, let me watch NQ. So we're going to flip to NQ, right? The same 8:30 open right here, right? We can now see the SMT kind of play out, right? So now we have this SMT divergence. Now we have and this is also the previous week high right here. So we have some criteria that's kind of met to build the framework for, the trade. So we have SMT, right? NQ made a higher high. ES made an equivalent low right here. Failed to make a higher high. Okay. Now it gives up the goods. Slams down, right? Taking these lows with it. And then it comes and retraces. Now I entered, but I kind of scared myself out of the trade, and I will show it because it's a good talking point. So I was here, and I did have my stop above here out of the displacement, but I didn't have this 5-minute free rate gap. And I had an old annotation up where it was blue, and I didn't really see it, right? Regardless, I didn't really clean up my chart before this morning. And so once it ran up here, I kind of just cut myself out. You see I got out at 41, 39, 75. But if I would have just, waited and I wanted 41, 27. But after it slammed down and I realized that this was a PD array that was, on my side, I wasn't really offside. I can now see, and I kind of marked it out with the consequent encroachment and everything like that. But we ended up getting in here, right on this volume imbalance. Those are my favorite right there. We got in right here. Says what? 41.36.25, 41.36.25. And we got out for a nice little win back. And down here too, this is a 5 minute fair value gap right here. And we just took it to the constant encroachment. And the low came in at 41.27. And we got out. We fluffed our stop or flipped our exit a little bit. And we got out there. So that was pretty nice. And I kind of just want to see, and I just want to show. Let me see. Let me jump back to NQ really quick. In the same kind of short, you could have taken in here with this PD array. If you were trading, NQ, and if you are trading NQ, you do have to keep in mind the exaggeration that you're going to see. You're going to see these nice strong candles, and this is going to bait people in. This is a previous week high. We shouldn't expect higher at this moment. Once this happens, we should expect like some liquidity taken, go for buy side, then we can continue to march on. So in that same framework, after 10, right? Again, we're thinking shorts on ES, short on indices, right? Now, once this happens, ES can move lower, right? It's like that. There's a correlation still in the similar pairs, but there's just like as an inverse pair of like we're looking at the dollar. Is the dollar going to move higher today, or is the dollar going to move lower today? And we could kind of frame the draw on liquidity like that. But same thing as it happens inside the indices. So now if you can see that how we kind of had that, this is the 1005 candle right here, and then it comes into sell side. So and it gets in sync, right? The hesitancy in the indices, like why this this short at 930 didn't work, because NQ decided to run buy side. So it's like a little external framework that you can pair with kind of framing a trade, right? It's not, I don't take entry techniques anymore from ICT. I just kind of take these little tidbits of how I can really refine my my basis and being patient and really kind of having a little different level of depth to my trading and how I want to approach it and how I want to use this as patience, because I would have shorted, that would have been if I would have shorted here, that would have been a nice little hefty blow through, right? And I probably wouldn't have my stop way up here. It'd probably been like right here somewhere. And then I would have, this opening bell candle would have just blown right through it. And then I've been trying to figure out why. But this kind of having this little extra layer of understanding and backtesting, it kind of helped me gauge what I was feeling. Besides the fact that I saw this strong candle with this 1005 candle open. It was really strong. And I was like, oh man, we might just blow it and, continue to make a higher high with NQ. But we end up working out. But I do want to go to the PM session today. So right here, I wanted this level right here, 4130 in the Discord. I called 4130 the AM lows. These equal lows right here were super suspect, honestly. So what we had a lot of bearish framework here. It just kind of played out ugly, and then it kind of just it moved without me, whatever, right? And then you can see I kind of took it ended up being like $87 loss, right? So this is on the 15-minute. I'm sorry, the 5-minute. This is a mean threshold of a order block. And let me just move my executions really quick. Again, so we had an SMT right here, right? If we go here, let's bring it up. Right. NQ's high right here, this candle failed to make a higher high. Sorry. Let's go do this. ES poked just above these equal highs right here. Then it gave up the goods. So we had a lot going on, and this is why I just want to talk about why I closed the trade. So it's because for me, I have the PD arrays written down as I'm trading. Like, okay, what am I basing my framework around, right? We had these levels being respected currently, this order block being respected currently. We had a buy side imbalance, a side inefficiency being respected. We had another order block being respected. So when price kind of just jumped and came and kind of violated these PD arrays, I was like, okay, maybe it could come up here and then take this out. But again, we have FMC approaching, so not really the opportunity to really kind of, I wasn't really put that money on the line to see if I was going to work out, right? I take my two to three trades a day max. Again, like the AM session, that loss was me cutting myself out, but the trade was still valid. Just the fact that this candle closed above this fair value gap, and that's what kind of I was waiting for, or not sorry, not the fair value gap, but this order block. That's what I was waiting for. Once that happened, I thought that this now was going to trade into here, and now we're going to move higher, right? But I mean, it ended up giving the ghost, and it worked out. But and I don't feel bad that I kind of potentially missed out on five or missed on the money. Like moves are going to happen without you all the time. Days you decide not to trade. Like tomorrow, I'm not going to trade because there's no high impact news or there's no medium impact news. There's probably going to be some moves that I could take advantage of. But the discipline of knowing something happening and not pushing a button is enlightening, right? That I'm not compelled to go try to chase this long run to a level like. You know what I mean? Then that's where you're going to find yourself being offside and then ultimately probably taking a loss that's, what you didn't want, because you're kind of going back like, oh, you're chasing price and now you violated some rules, I'm assuming. Or if you had any rules, you kind of said you threw them out the window because like, oh, it's going to a level I called. Like, I mean, it is what it is, right? There's 240 something trading days in a year. There's over 100 something left. We're not even halfway through the year. There's plenty of money to be made. So I'm not really too worried. But I did want to kind of cover that because I know even for me that, I mean, I'm not a guru and I don't ever claim to be. I'm always a student. But it was a little complicated hearing him explain it, but I really had to dig in the charts and really apply it and see how it works, and that included with time and price. You can really give yourself the real framework of having a high probability opportunity to trade. So appreciate you guys listening. I really just want to kind of cover that and give some gems and really kind of leave that with you guys. If you guys are index trader or futures traders and trading S&P and NQ, or if you're in commons and you may only trade tech, and there might be a correlation between tech and oil, or tech and the banks, or between different sectors. You know what I mean? So there's plenty of study that you can do. I don't know. I don't trade commons. I only trade ES solely. That's the only thing I focus on. But go ahead and back test it. Try it out with a few different things with different tickers. And now this is a little complex because this is a correlated pair that you're seeing the asymmetrical things happening, and then you can kind of time when the market should be symmetrical, and then you're on side with the run. So it just really refines it for you, and I really like it. And it's not really a entry is more of a confirmation. Like you have to have the higher time frame bias, the analysis. Like we had we had SMT here, big SMT back here, right? So there was already underlying weakness. We had PD arrays that were being, oh, nice. We took out money's low today. Very nice. We had PD raised on the daily not respected, right? So if we kind of just jump into here, right now we see we had optimal trade entry from this price range, right? That's last week's price action. So that's how we kind of frame the bias. But I appreciate you guys tapping in. Thank you guys so much, and I'll see you guys on the next video.